Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel L. Conan. And on the line, I have Sarah Potter. She's an options and futures trader. She's the owner of SheCanTrade.com and author of the book, How You Can Trade Like a Pro. How you doing this morning, Sarah?
I'm great, thank you. How are you doing?
I'm doing good. And how have the markets been treating you lately? Been pretty much straight up here since the last time you were on. Have you been able to navigate that V bottom in the markets?
Absolutely. Actually, yeah, through that market correction, we did really well in the trading room, and my trades held up really nicely. And I think that is a just testament to the consistency of the trades that I usually place and how I evaluate the market to place trades. So we're still doing great. And then, over the last couple of weeks, it's just wow, fantastic, right? With the market going up as high as it is, it's just what not to trade really, because there's really a lot of great trading opportunities.
I want to ask you about a Microsoft trade. I think that when we had you on a couple weeks ago, I think you were playing the 46 weeklies, and I don't remember how that, but I had a note to ask you how. It's hard to remember every trade, but I know you were playing that one from the long side. Were you able to eke something out on that, or is your strategy to like roll them over into the next week if you don't get your desired push during the week?
Yeah, I think it was the 45 calls that I had.
Mm.
It could have been the 46 too, because I did Microsoft a couple times. Like that's the nice thing with weekly options. If it works really well one week, then the following week I place the trade again. So Microsoft now is up. It had been up above 49. So that trade actually ended up working out well. Just another good consistent trade. I didn't probably get the same amount of profit that I would have loved to get on it. It wasn't a huge trade for me, but it was still a good trade. So what I had done on that one, I bought the call and I had used, I think it was 2 or 3 weeks out. So I had given myself a little bit more time on that one. So yeah, I ended up doing well. It's up at 49 now. I wish I was still in it, but it's easier to say, hey, I did it really well and I got out too early and took profits rather than looking at it now and being like, oh, if I had held on to it, look how great it still would have continued.
We
But
we talk
yeah,
about
no, that one was good.
we talk about that all the time, and that's the one thing that's really tricky about the weeklies is that you're pinpointing it for an exact time period, and a lot of times it's you just go out another week or even 2 weeks. It gives something a little bit more chance to work for you. I want to talk to you a little bit about being a full time trader versus a part time trader, and it's hard. I mean, and sometimes it's probably good because if you have something else occupying you, a job or something, you can put things on. Probably have a little bit longer term perspective. Could you just give us your take on that?
Yeah, and I think I'm one of the few traders, and I know there's others out there, obviously, but I started trading part time and I had a different full time job. And then I moved to now doing this as a full time career because everything's working out really great. And I think kind of what I've learned by having both perspectives on the markets is that your take or your goals in the markets need to be adjusted according to the time that you can really place in front of your computer screen looking at your charts. And all too often, I have people that contact me and say, hey, I really wanted to start trading. And they don't have the time to look in front of the markets, and they're placing trades that really aren't appropriate for part-time traders. And then they get really frustrated because they're like, well, it didn't work, and I lost all this money, so I can't do this. Whereas I think if people maybe had a more realistic expectation of what you could do and how you could trade if you are part-time. So for instance, if you wanted to trade options versus stocks, obviously it's cheaper to be involved in options rather than buying and holding stocks. So that's kind of an advantage. And just even understanding that, there is some time that you need to obviously place in terms of learning the skill and learning all the terms, because we have to, let's face it, there's a lot of terms in the options world that maybe isn't like regular language for an everyday dinner table conversation. But really once you spend that time learning some of those things, you can really focus your trading based on the time that you have. So, you don't have a lot of time, then, out of the money spreads are a great way to trade. It's not as flashy and it doesn't have as much momentum. You're not certainly going to make as much as if you're going to guess a stock that's going to double in price. but it's just consistent money. And generally people who are trading part-time, that's really what they're looking for. They want to build up their account. They want to have a little bit of extra money because they want to build a deck this summer, stuff like that. Right? Those are their goals, as opposed to saying, I'm going to put money down on Microsoft and I'm going to look to double my money and I'm going to make millions in one trade and then I'm going to retire. I mean, hopefully people that are trading part-time don't have that goal, because that goal is going to be very, very difficult for them to achieve. And I want people to have success.
So adjust your trading strategies to the time frame or the time that you're able to devote to it. Very good point. Any futures trading for you, Sarah?
Yeah, I've been quite involved in futures trading as well, especially because the markets have been moving as much as they have been. So the ES has been looking really pretty. I'm just going to go there right now. So when I do futures trades, I do a lot of intraday trades. So I'm just kind of in and out. And I have found, different. When I was trading part-time, I used to trade the euro in the morning before I went off to work. And that worked really nicely. But these days, what I do is basically trade the ES kind of around like 10:30, between 10:30 and 11 is usually when I'm in and out of the trade. I don't know about you, but I kind of find that things get into a nice groove. Like, I don't touch the market open in terms of futures. I think it's too all over the place, too crazy. There's no sense in trading that when you can kind of settle down. I call it my coffee break trade, because the joke is I think that everyone has jumped into the market right at 9:30. They've placed their trades and then they go to get coffee. And that's when I generally get into the trade, because there's usually a nice trend that has established. And then, can I get in and get out before people go to lunch?
Oh, really?
But
So
yes, certainly to the long side. We're over the 2000 level now, and that was something that I had called a long time ago when everyone was saying, oh, no, we're not going, we're never going to be able to hit up there. And we absolutely did. We had the nice correction, which was great for getting into opportunities. And I've been on the long side there in the ES over and over again. And it's just really great. Now, however, if you look at the markets this morning, it almost looks like we're having just a little bit of something pulling back. Nothing significant, but this is also a nice opportunity, I think, to be setting up for another trade to buy in the ES. So with price kind of hovering now around that 2035 level, and you have it kind of pulling back, it looks like that on the 21 EMA on the 60-minute chart, it actually looks like I think that would be a nice entry. Now for me, because I don't trade the market open, I can say that, but I'm not actually going to get into that trade at 9:30. What I'll do is watch to see where it goes and what it does, and then again look at it around 10:30. And what I'll be looking for, because we have price that's come below the 21 EMA on the 5-minute chart, I want to see whether or not we're going to continue to go lower here, or whether that 2034 on the 60-minute is going to hold, and then look at a nice entry opportunity using that 5-minute chart to the long side.
Right, and then also, I mean, a lot of times by 10:30 or the time that you're talking about, if the pre-market lows or highs are still standing, pretty good chance they're gonna stand up. For example, yesterday we made a 2050 low in the overnight session. Never even sniffed that during the regular market. Just got below the close. So there's definitely some good ideas to wait for the market to open up, shake and bake a little bit. I know a lot of traders use in the ES. They like to wait for the first 15-minute bracket, wait for a breakout of the higher or low, and then play it that way. So definitely another way to play the S&P 500 futures. You mentioned Netflix, and boy, that stock has really come back after the earnings miss. I know Mark Cuban was all over it. How you been playing Netflix?
Okay, so Netflix is a trade in terms of time at weekly options. It's a trade that I have been doing over and over again in the trading room. So every week placing a trade here. And if you look to me on the daily chart of Netflix, it is a classic, perfect example of doing a out of the money put credit spread. Because if you can see what price has done over the last, I don't know, can't count the bars, let's say 10 days, it's really just kind of moved sideways. It's absolutely, it really suffered, right? At earnings, it had a big news announcement and it just plummeted. another topic for another day, but another reason why I think that it's not a good idea to trade earnings. There's your example. But anyways, back to kind of trading it. It's just been so fantastic because it's really just been consolidating. So when price on a stock really moves sideways, like what you're seeing here on Netflix on the daily chart, it's just a great way to trade weekly options. And all you're doing is picking a level that's below where all those levels of consolidation are. So for instance, selling like the 375s or selling the 370s and buying back the strikes below it. So you're creating a spread. So let's say selling the 370s, buying back the 365s, and collecting the credit that's there. And then it just expires Friday, so that as long as Netflix doesn't go down to that level on Friday, you collect all that credit and you keep that in your pocket. And this one we've just been doing week after week after week. It just looks like there's so much support there around 380, and it really, with this nice consolidated move, I'm expecting it to come back up, obviously, and fill that gap, that space that it had after those news announcements. And so while it's kind of working on getting through all those moving averages on the daily chart, it's just a great opportunity to be collecting credit, rather than some people who might look at this and say, oh, there's a gap to be filled here, so I'm going to try to trade this long, which you could do. It's not a horrible idea. But the thing with options is because you have time, right, and you have to figure out, well, how fast is that going to go? I don't want to be correct on yes, I think Netflix is going to go back up into that 440, 450 range, but I have to get the timing right on it as well. So rather than worry about the timing, just sell this spread that's below it, and just take advantage of that trend that had existed there on the weekly chart. You collect the money week after week, and that's what we've been doing, and we'll probably do it again this week. It continues to look great.
How did you learn about options, Sarah? Did you read some books? Did you attend some classes? You got a pretty extensive background. How did you acquire that?
Well, it's a funny story. So I do not have a financial background at all. I was a learning consultant, and I used to do professional development for teachers and universities and ministries and such. And I just kind of really I wanted to learn about the market. So all I did was took my knowledge about learning and adult learning and applied it to myself and started to teach myself how to trade. And it took a while. I'm not going to say, hey, I picked this up right away and I made lots of money. Absolutely not. I lost money there at the beginning too. But I read a lot of books, tried to ask questions where I could, tried to catch whatever free webinar I could get, and basically followed a good structured trading plan, worked really hard on that. But like I said, and that's why I think anybody can do it, because I do not have a business degree. I did not have someone kind of mentoring me. I really just figured it out. And it's possible for everyone else to do it. And that's why I wrote my book. My book, How You Can Trade Like a Pro, talks about how I did that, how I went from being a part-time trader to full-time. It talks about my actual trade setup step by step. I wanted to create a book there that was available for anybody learning to trade futures, options, or stocks, to give them a good step on how to do it, because there's really not a lot out there. So that was really what I wanted to do. I wrote a book that I wish had been out there when I was learning to trade. And the book's doing really great. Actually, I'm really proud to announce that it was nominated as an editor's pick on Amazon this year for finance books. So that I think I'm really, really proud of, and I'm so glad that I've written something that so many people are really valuing, and I'm happy to be transparent and show people exactly how I'm doing it.
Who's the publisher?
McGraw-Hill is the publisher, so
Nice.
it's available on Amazon, and then it's also Barnes & Noble. I live in Canada, so it's also chapters in Indigo here, but it's also available around the world. It's crazy. Sometimes I get emails from people like from everywhere, Singapore. It's just amazing to understand the reach that this book is getting, and so I'm really proud of it.
Oh no, that's great. And so if I ask you what your favorite book is, you just on the markets, you just mentioned it right there to me. Let's talk a little bit. Go back to stocks here a little bit. Alibaba. I mean,
Oh,
everyone
yeah.
blamed it for the all-time high. Remember, it made the same day the market made the all-time high. Former all-time high was the exact same day that Alibaba IPO'd, and so everybody. Mark Holbert, big articles. Baba put the all-time high in, and now you see what happened. This thing has just had a tremendous march. If you were waiting for it to come back to the IPO price, forget that. Broke out over 100. Have you been trying to trade this yet, or do you wait for more data to develop?
Yeah, I haven't traded it yet. And I haven't because this one really broke the trend. Remember, all these other, and I consider Alibaba like a social media type stock. It's a new stock for a new generation of companies. And really, it has done something very different than all your other earning stocks did. Remember, we had some that really came on the market and plummeted, right? But Alibaba broke that trend. It's just on fire and it continues to go that way. It's just up and up. So for me, I'm watching it. It's not something that I'm trading it at this point. I mean, certainly I'd love to say, oh yeah, I got right in right away and look at it now, I'm making all this money. But I'm happy to say that no, I did not get in it and I'm okay with that. The daily chart looks gorgeous in terms of the long side, but you don't want to get in on anything at the end of a move, right? And that's really what my concern would be about trading it at this point is I don't want to get in when things are too high and it doesn't have enough momentum to really go again to make it worthwhile to do a directional type trade. So I'm just sitting and watching it in amazement, just like I'm sure lots of other people are, and just saying, wow. But, you know, the nice thing about trading is if you have patience, there always are good trading opportunities that come up. And as long as you're not jumping into things because there's a lot of hype, and certainly there's a lot of hype about Alibaba, you can be patient and wait for those opportunities, and you can make money too. Everybody can make money in the market. But what I would say is this is not an opportunity for an entry. This chart looks really nice in terms of strength, but I'm not seeing an entry here because we just have price just really on fire. And hey, if you're in it, good for you. Great job.
So you like to wait for a little bit more chart data. I mean, they did come out with some fundamental information. Good earnings last quarter. So you just like for more price pattern to develop before you jump into the fray.
Yeah, and same like Twitter. Remember, Twitter just came on the market and just kept going lower and lower and lower. I waited for the bottom on that one and actually called that one really well and got into Twitter and have done very very nicely in Twitter because I was patient and waiting for a good entry. So I'll be doing the same thing here in Baba.
What about Twitter here? What an interesting move we've had. I'm bringing up the daily chart. You had the gap in the go after the last earnings. Ran into some problems at 55, 56, and now you're coming back down to the gap fill area. Just really been holding 40. It kind of gave away yesterday. Any thoughts on Twitter?
Yeah. So Twitter, I think when I look at it initially, I think it's an opportunity for a call credit spread. So doing a spread rather than a directional trade and taking advantage of the moves that it has had a little bit lower, but it hasn't had huge big pops lower, right? So it's generally been in the range between 42 and now down to around 39.50 area, right? So that's not huge moves, but it would be a nice opportunity for waiting for Twitter's 5-minute chart, so price to come up a little bit higher, to come back up around 40, and then what I'd be doing is trading a call credit spread, so getting above that, and then it can continue to go down. That's great, or it can go sideways, and I can still make max profit on the trade. That's how I'd look at Twitter right now.
Okay, and just final thoughts on the market here. We've made new all-time highs in the last few sessions. A little bit of tighter ranges the last few days. Today is Veterans Day, something to
Yeah.
take in account. Any words of caution for the market here, or something that you'd be looking at for a little bit of a trigger on the downside?
Well, for me, actually, today's probably going to be a light day of trading. With bonds not being open there, there aren't as many people that'll be involved in the markets as usual. And since I always like to trade in the direction of where everybody else is going, then I'll probably just kind of stay light. Like for me, I'll probably be looking at placing a Netflix trade. I'm in Panera. I'll probably be looking to get out of that one for a nice profit. Waiting for opportunities to come up here. As I said, waiting for Twitter to pop up a little bit higher. It's okay to be patient because tomorrow will come along as well, and there'll be a great opportunity for trades, I'm sure.
Okay, Sarah Potter. She's an options and futures trader. She is also the owner of SheCanTrade.com and author How You Can Trade Like a Pro. Joining us here on Benzinga's Pre-Market Prep, brought to you by MarketFi. Thanks a lot, Sarah. We'll talk to you again soon.
Thank you. Have a nice day. Bye-bye.